Hi, Brandy Fugate here with the Private Label Real Estate Group in Tulsa. I want to talk to you today about the tax advantages of owning your own home. Number one, mortgage interest. If you have a mortgage on your home, you can take advantage of the mortgage interest deduction. You can lower your taxable income through this itemized deduction of mortgage interest. Number two, home equity loan interest. A home equity loan is essentially a second mortgage on your house. With a home equity, you can access the equity you've built in your home as collateral to borrow funds that you need for other purposes. Like regular mortgage interest, you can deduct the interest you paid on a home equity loan and home equity lines of credit. However, you can only make this deduction if you actually use the borrowed funds for home improvement. Prior to the tax cuts in the Jobs Act of 2017, you could deduct the interest on these loans regardless of how you used it. So if you took out equity in your home to fund a European vacation for 3 weeks, you could actually write that interest off, but they stopped that back in 2017. Number three, discount points. When you take out a mortgage, you may have the option to purchase discount points to lower your interest rate on the loan. If you have this option, one discount point will equate to 1% of the mortgage amount. If the points are purchased to reduce the mortgage interest rate, you can deduct the cost of discount points. However, loan origination points will not be tax deductible because these are fees that don't affect the interest rate of your loan. There's actually some other closing costs as well that you can deduct. So for example, this is November. If you were to buy a home right now and close in the month of December, you wouldn't have any mortgage interest because you're not making a payment in 2023. However, some of your closing costs that will appear on your settlement statement at the time of closing are tax deductible. So make sure you get that closing statement to your tax preparer to take advantage of those tax discounts. Number four, your real estate taxes. As a homeowner, you'll face property taxes at a state and local level. You can deduct up to $10,000 of property taxes as a married couple filing jointly, or $5,000 if you're single or married filing separately. Depending on your location, the property tax deduction can be very valuable. Number five, necessary home improvements. Necessary home improvements can qualify as tax deductions. Of course, the definition of necessary is somewhat limited. If you decide to upgrade your fully functioning kitchen, those improvements may not qualify. However, if you have to make permanent improvements to make your home more accessible for medical reasons, that should qualify. A few examples might include installing medical equipment, installing railings, or widening doorways for an accessible home. Number six, home office expenses. As a real estate agent, I love this one. If you operate a business in your residence, you may deduct some of the expenses of maintaining that space. The IRS requires that you use the home office for regular and exclusive business in order to justify or to qualify for the deduction. If you only use the office space when it's convenient or just working from home for your employer, that will not qualify. But in terms of deductions, the size of the deduction is based on the percentage of your home's dedication to the workspace. So for example, if my home office is 30 feet off of my front door, your customer has to be able to come to your front door, come into your house, and go to your home office, wherever it's located in your home. Also, you have to be able to provide a restroom for your client. So there's certain percentages of the house. So let's say I'm using 20% of my square footage for my home office. That means I get to write off 20% of my real estate taxes, my homeowner's insurance, my utility bills, my housekeeper, my lawn guy, my the guy that comes and picks up my dog's poop out of the yards. Any of your expenses that relate to managing your home, you get to write a certain portion off. This is a great one, guys. Number seven, mortgage insurance. PMI, private mortgage insurance, is another expense that many homeowners must factor into their budget. PMI is there to protect your lender if you're unable to continue making your mortgage payments. You can deduct your mortgage insurance payments on your itemized tax return. Number eight, capital gains. Capital gains tax breaks come into play when you sell your home and make a profit. The capital gain is the difference between the value of the home when you bought it and when you sold it. So for example, let's say you bought the house for $100,000. A few years later, you sell it for $150,000. With that deal, you would walk away with a capital gain of $50,000. However, if you were using the house as your primary residence for at least 2 of the past 5 years, you could keep some of the profits without any tax obligation. As a married couple filing jointly, you can keep up to $500,000 in capital gains. As a single filer or married filing separately, each party can keep up to $250,000 of capital gains without a tax obligation. The key here is that you had to have lived in the house at least 2 of the past 5 years. The bottom line is that owning a home comes with a suite of financial benefits. It's important to approach tax season as a homeowner with a careful eye on maximizing the value of your home. With potentially thousands of dollars in tax deductions on the table, it's a good idea to add up all of your tax breaks. Compare the sum of your itemized deductions to the standard deduction before deciding which option is better for your tax return. If you're a homeowner, then you should take some time to explore your tax deductions. If you need help tackling any of the details of the situation, it's recommended that you speak to a tax professional, not just me, to ensure that you're cashing in on all of the tax deductions available to you. I hope this was beneficial. And if you have any questions about buying or selling real estate, please give us a call, 918-238-8193. Thanks.